Hey guys, today I wanted to walk you through the mechanics of executing a poor man covered call trade. I know a lot of you joined us over at Hidden Freedom Investing's YouTube channel for this past Sunday's live stream. If you missed it, I am going to link Dave's channel and that video down below in the description. Feel free to check that out. But one popular strategy that is becoming popular and that I'm employing is the poor man's covered call. And I just wanted to make this video to try and show you how that trade is executed. I'm not going to execute a trade, but I'm going to show you the mechanics of it and what I do when I open one of these poor man covered calls. So if you're new to the channel, like, share, subscribe, do all that good stuff. Down in the description below is a affiliate links that you can use to support the channel. I would appreciate it. Really helps me out quite a bit in these times. So let's get into it. So what I'm looking at here, I'm not going to show everything because there's some sensitive information on the trader workstation, and so I'm going to just show pretty much the option chain screen, and I'll have the strategy builder turned on. So what we're looking at is an AT&T option chain. Now this is the option chain. These are the strikes that are available. This is the call side with the bid and ask price, and this is the put side with the bid and ask price. And up top left is the dates available and the current share price. So the first leg of a poor man's covered call is the long leap, the leap call. So if you click here and click more, now this is, of course, in Interactive Brokers. I don't know the mechanics of how these work in other brokers, but Interactive Brokers is the one that I use primarily. So what you do is you buy a leap call out to January 2023, essentially 2 years out. Now what I like to do personally, this isn't super critical, or this isn't a hard and fast rule. This is kind of my rule that I put in place for myself, is I like to see the strike price that you do, because you want to go in the money, deep in the money. So that means below the current share price. So what I like to see is the strike price plus the price that you would pay for the call to be very close to what the current share price is. Okay, so if you were to pick a 20 strike here and you would buy that leg, okay, and if you were to go to the mid price, the strike plus the price that you would pay for the leap is your break even price. So $20 strike and an $8.95 is what you pay, so $28.95. So that's very close to the current price. And if you look at some of these other ones, like this $25 strike, it's going to cost you about $5. So you're, $5.05, you're over $30. So I don't like that. There's nothing inherently wrong with buying one of these cheaper ones, but your break-even price will be higher. So you have to know that. So, because if you bought this $25 one, your break-even price would be about $30.05. So you'd have to sell a covered call higher than that. So let's just say we buy that at $8.95. So we have a break-even price of $28.95. Then we would go to our regular current time. Let's say we have expiration February 19th. We know we have a $28.95 break-even price on the leap call that we just bought. So you can come down here and sell the $29 covered call at 53 cents. And what that would do if you're using the strategy builder, is it would now reduce, you were paying $8.95 for this transaction, but now since you've sold the covered call and you're getting 53 cents, you are now having a debit of $8.52. So as you continue to sell these covered calls, your cost basis, what you paid for that long leap, will decrease in price. And I'll show the mechanics of that in the Poor Man Covered Call Tracker. So one tip for you guys, if you're in Interactive Brokers, I would put these legs on separately so that you can control the bid and ask price, or what you pay for or what you sell for the call and put, if that makes sense. Now, if you were to input that into the tracker, then you can see Thumper made this, and he's usually in Randy's Discord, and Wealth of Knowledge that guy has. I'll put Randy's Discord down in the description as well. But if we look at the covered call tracker, you would input your ticker. You got all this information is everything that you just did. You purchase date of February 1, expiration date. This is the leap, so you would input the price of the stock, the strike price, what you paid for the leap. Here I went out to March 5th, so I like to do monthlies on Poor Man's Covered Calls because they're less work. So a $29 covered call will get you about 77 cents still. So you'd enter the strike, enter the premium you received, and the commission you paid, and that'll end up your total profit. So what this is doing is, you now see you paid $9 roughly for that leap. You collected 70 cents premium from selling the covered call, so your leap cost basis will be going down, and your break even will be going down as you continue to sell these covered calls. So once you put in all that information, it'll kick out a profit for you, and right here is where the magic is. You get profit of $75.70. Leap profits of none. This leap profit will only really come into play when you close out the position. You could go in and adjust this price and it would tell you what your profit and loss is, but looking at cash on cash on this, $900 invested, you got $75.75 out of it, which is a 8.41% return. And to verify that math, you take your profit, $75.70, you divide it by the amount invested, which is 900, times that by 100, and we should have 8.41, which we do. So we got 8.41% on this trade. As this trade develops, or if AT&T were to go above your $29 strike, you can buy it back and sell the later one, or you can choose to close out the position, because as AT&T rises in price, your leap premium, your leap cost, you'd be able to sell for a profit, which would wipe out the losses you may take if this were to go above the strike. Now, I'm going to have to do a separate video here, and I'll show you how that looks when you close out a Poor Man's Covered Call. Okay, so I hope this helped a little bit. I tried my best. Options aren't the easiest thing to do videos on and explain, so if I miss anything, leave me a comment down below, leave me questions and all that. I'll try to do some more videos, especially on this Poor Man's Covered Call, because it's probably the easiest of all. Besides covered calls, it's the easiest of all to actually put across. So leave me a comment down below, like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.